right, hey, what's going on? This is Dan Keller, mortgage advisor and branch manager at Guild Mortgage. Hi, friends. So it is December 3rd, 2018, and as we transition out of 2018 into 2019, we're finding ourselves in a really healthy housing market up here in Seattle. It's normalizing, but it's also causing some confusion between sellers and buyers. And what I wanted to do is share in the next 3 minutes a strategy that is benefiting both sellers and buyers at the same time. And I really believe it's our job as a mortgage professional to present strategies like this in the marketplace that will benefit you as a seller or buyer or real estate professional in regards to putting together a transaction that is best suitable for all parties. And this is a rare occasion where we can do exactly that. So if you haven't heard of me, my name is Dan Keller. I'm a branch manager and mortgage professional over here at Guild Mortgage. And I'm going to share with you a strategy that was used back in the 2008 and 2009 markets where the housing market was much slower. Interest rates were, 30-year fixed rates were in the sixes, mid sixes. And this is a strategy where the buyer would negotiate a 3% seller credit from the seller to be applied toward buying down their interest rate. And you would get a sub-market interest rate. This is also a really good strategy today for buyers as we are navigating through a market where interest rates are increasing, where they can lock in a really low 30-year fixed rate. So coming back to the strategy, I want to share with you a real live example of how we're using this in today's market. Again, this market that we've gone through over the past couple of years was not normal. You know, a 30 to 60 to 100% appreciation rate in certain areas was definitely not normal. And what it's done now is it's created some unrealistic expectations for sellers and buyers. And what we need to do as mortgage professionals and real estate professionals is bring them closer together, bridge that gap. This strategy can do that. So this is a real life example from the other day where we had a real estate agent reach out to me. There was a $925,000 listing, and they'd had numerous lowball offers, and they were almost coming to terms on an offer. And that's when they reached out to me to say, hey, is this okay? Is this right? And so list price $925, negotiated price, offering price $875. So buyer was lowballing the seller by about $50,000. In comes this strategy, the seller buy down strategy. I kept the purchase price at $925, negotiated that the seller would pay 3% toward the buyer's closing costs, which is about $27,000. And by using this strategy, get this, it saved the seller $22,000 versus doing a $50,000 price reduction, but it also saved the buyer about $188 a month as compared to just dropping the price by 50 grand, but more so about $17,000 over 5 years and about $70,000 over 15 years. Big win for both parties, both buyers and sellers. But get this, the seller would have had to drop the sales price to $835,000 for the buyer to achieve this monthly payment. So this is a strategy that's working. If you're a buyer or a seller, I'd love for you to reach out to me and let me run numbers for you like this, customized toward your situation. If you're a real estate professional, I'd love to connect with you and share with you more information about this strategy and how to present it to both buyers and sellers. I hope this information helps. I look forward to connecting with you down the road. Bye for now.